Welcome back to another episode of Do More with Your Money. I'm your host, TJ Van Gerven. Today I'm joined by Zac Townsend, CEO and co founder of Meanwhile, the world's first life insurance company fully denominated in Bitcoin. Zac's background is incredibly deep. He was head of product and co founder at Standard Treasury, worked in tech policy at multiple levels of government, and has been a thought leader in the evolution of financial infrastructure. Now, with Meanwhile, he's building a Bitcoin native financial institution with the goal of redefining how life insurance and legacy planning can work in a digital asset world. We're going to unpack why Bitcoin, why life insurance, and how this all ties into the future of wealth planning. Super excited for this one. Let's get into it. Zac, welcome to Do More with Your Money.
Thanks. Happy to be here.
I'm looking forward to talking to you today just because, I personally have conviction in Bitcoin as a long-term asset class, so I'm really interested to hear about, how you're using it with your insurance company. So, most people wouldn't put Bitcoin and life insurance together, wouldn't immediately connect those. So, talk to me about what you're doing and why you're connecting those two.
Yeah. Uh, well, sort of two different directions, right? Like one is we believe, as you just said, in Bitcoin as a long-term asset. We don't necessarily, have any opinion on what the price of Bitcoin is going to do today or tomorrow or this week or this month or whatever. But if you look back the last 10 years, it's the highest performing asset, I think, in existence. So we think that if you look forward 10, 20, 30, 40 years, and that's the timeline you're thinking about when you think about life insurance, that Bitcoin is going to be a durable store of value and, in fact, increase in value. And, that's just like great compared to the dollar, right? So, my wife and I, we had kids. Our first kid was born in 2018. If I bought $1 million in life insurance coverage in 2018, I've seen the purchasing power of that policy go down 20 to 30% based on inflation, right? And if I had
Right.
bought a Bitcoin denominated policy, which I didn't because we didn't exist yet, I would have seen the purchasing power of that policy only in, or not, it will, radically increase over that time, 200 or 300%. So uh, we sort of think that anyone who's concerned about inflation risk or currency risk or political risk or jurisdictional risk or just wants an inflation hedge, that this is an amazing product. And in the end, and I can go through all the benefits and like how it works, but fundamentally, we've just taken a dead simple whole life product. I joke it's like a product design from the 1830s. It's very straightforward, very simple. It's just that instead of it being in dollars or euros or yen or Swiss francs or whatever, it's denominated in Bitcoin.
Okay, so if I'm understanding this correctly, when you say it's denominated in Bitcoin, the policy premium, the amount of coverage that you're getting is fluctuating based on the actual performance of Bitcoin?
Yeah, I mean, denominated by Bitcoin means let's I'll use big round numbers, but these are big numbers. Like, imagine you want to buy a policy and you pay us 1 Bitcoin a year for 10 years. So that's like $1 million. So that's a lot, but like anyway,
Sure.
and then we promise a fixed guaranteed payout whenever you die, but that's in Bitcoin terms. So in the example I just gave you, you've given us 10 Bitcoin and we're going to promise you 15. So yes, your hope and expectation is, one, that you're going to live to be 95 years old, and two, that those 15 Bitcoin, in 50 years or whatever are going to be worth a lot more than in dollar terms than 10 Bitcoin you put in. But conversely, we like to be very straightforward. Like there's not protection in dollar terms, right? So
Right.
if those 10 Bitcoin end up being worthless, which I think is pretty unlikely at this point, but if that were to happen, yeah, yes, we will pay out your love, your beneficiary, your wife and your kids,
Right.
15 Bitcoin, but it won't be a lot.
I see. I see. Okay. So why so somebody that's gonna do this denominated in Bitcoin, they have to be a long-term have long-term conviction in the asset class essentially, right? Because you're paying in
That's right.
Bitcoin and
That's
you're
right.
getting paid out in Bitcoin. So that I mean,
And, and,
yeah,
and one of the big things we say is like, we aren't really, now you, TJ, might be, but like, we don't see ourselves as trying to convince people to buy Bitcoin.
sure.
We see ourselves as saying like, hey, if you've already made a decision to own 1 Bitcoin or 10 Bitcoin, or we have a policy max size of about 30 Bitcoin going in. If you've already made that decision, again, for inflation risk reasons or currency risk reasons or whatever, then this is a normal tax and estate and protection planning tool, which is to have whole life insurance. Um, and like, this is the right structure for your Bitcoin holding, particularly actually if you're the type of person who doesn't really need that Bitcoin today or tomorrow, but is like thinking about the long term.
Okay, that makes a lot of sense. I guess, so I approach things from a financial planning perspective, and a lot of the time I focus on term life insurance, right? Just having coverage for a
Yep.
certain amount of time. Obviously, this is a permanent insurance policy, right? So
Correct.
talk to me about like what are the situations where somebody can benefit from a permanent insurance policy and obviously factoring in the potential Bitcoin component, which it would
Yeah.
be in this case.
Yeah. Well, so let me start by saying what is perm versus term, right? So permanent
Sure.
insurance, in our case, whole life, it lasts your whole life. It is permanent. And because you will eventually die, there will eventually be a payout. And then term life lasts a particular fixed term, 10 years, 20 years, 30 years. And the ratio on term life tends to be very high because, if you're a young, healthy person in your 30s or whatever, you're very unlikely to die in the next 10 years. So it truly is protection. So my wife and I each have term life policies in dollars equal to our mortgage, right? So if I get hit by a bus, my wife gets the house paid off.
Right.
Um, and I just want to be clear, we're not like, you should probably have term life, particularly if you have a bunch like liabilities like a mortgage in dollar terms. Our product, yeah, is whole life. And in traditional financial services, you're probably been told like, hey, buy term life, don't buy perm, and then like invest the difference
Right.
because the stock market will outperform. Um, I think what's unique about this again is like, we sort of come at it from the other direction, which is like, one, Bitcoin is a unique asset that's going to go up a ton. Sorry, I'm not, no guarantees, not your investment advisor,
Yeah.
but
We
like
think in the
you're
long term.
likely,
Yeah.
like if you want to make that long term bet. And the second is that it's actually very, very, very hard to get yield in Bitcoin. That is, turning 10 Bitcoin into 15 Bitcoin is incredibly difficult. Now we do that by lending to like big creditworthy institutional counterparties that you know the name of. We've never had a credit loss. But there's no like 7% yields in Bitcoin. We essentially get like 2 to 3% yields in Bitcoin, and then we promise our users 2%. So um, we are actually offering
What do you mean
that
by
like
yield exactly? Like you're getting paid from lending out this from the Bitcoin you're saying?
correct.
Okay, I got you.
Correct.
Okay.
Yeah, yeah.
And then you're able
So
to transfer
our
that to
job is to
the
turn those 10 Bitcoin into 15 Bitcoin. Uh, you know, I was going to say before you die, but it's before the population of people on a statistical bit. Anyway, yes, like we
sure.
have a, a corpus of Bitcoin that we invest in things you'd understand, like basically loans to institutional counterparties. And so in that way, we operate like a normal insurance company, accepting that a normal insurance company, you can probably outperform them, but it's like pretty hard to outperform us in Bitcoin terms. And then
Right.
even if you
Right.
weren't going to outperform us in Bitcoin terms, the tax benefits, which are true of all whole life. I don't want to like say this is a unique benefit to our
Right.
policy. Like it, the investment returns in the policy are tax free. It's going to your kids or beneficiaries tax free. And the like really interesting thing is you can take a policy loan against the policy tax free. So if you believe that Bitcoin is going to be worth significantly more in the future, you're essentially putting it in this policy, and then you're seeing that capital appreciation, and then you can borrow value back out of the policy on a tax-free policy loan. So it's a way to lock
Defer
in
taxes
defer taxes and lock in
yeah,
basis.
because basically you obviously with any like you said, with any whole or permanent life insurance, right, that's gonna be a tax-free payout to you. And you're
Correct.
saying because it's denominated in Bitcoin, and if we expect good long terms of Bitcoin, right, you're gonna have a larger tax-free payout at death.
Correct.
Okay.
Correct.
So I guess, yeah. So, and we don't have to get on to the nuance of it, but like, I want to hear your thoughts on like, so who can benefit from a permanent policy? Because you mentioned like, yeah, sometimes term may be better, right? Like it's a lower cost solution. It covers you just for a term period of time. Um, and you could invest the difference in Bitcoin, for example, right? So like, why? So what else is needed in your opinion, like for the whole life component to make sense?
Um, yeah, I don't really have a pitch for like when you should buy the Northwestern Mutual policy or the New York Life policy.
We love that.
I I I think that yeah, the unique combination that we have is that we're getting yield when it's otherwise quite difficult to get yield. And then the tax benefits are quite amplified and swamp if you have an asset that you think is going to go up, 2x, 3x, 4x, 10x, whatever over time. Whereas in a classic perm policy, if you could get 4% returns on the policy, but you can get 8% compounding returns in the S&P 500,
Right.
then that the excess returns are swamping the tax benefits in the 4%. But in our case, like both the yield is higher and the tax benefit is amplified by the underlying asset going up in relative value.
Okay, I get it. So the benefit comes from the 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 tax-free payout essentially at death, as opposed to the
And the tax-free
traditional
compounding and the tax-free policy loan.
and the
Like
tax-free and the
we have
policy loan
some
as well.
yeah, we have some policyholders who like don't even have beneficiaries, right? They're just expecting, you know,
So are people actively borrowing again? Like, have you had situations where people are actively borrowing against their loan?
borrowing against their policy.
I'm sorry, their policy. Yeah.
Yeah, the way it works, right, is you're like accumulating value over time. So it doesn't really make sense to borrow like immediately. Um, you really want to borrow in like year 12 or something. Now we do have a couple people who um, are on the older side who are intending to sort of use it as like um, I don't know, like a personally created annuity. So they actually like, we have one guy who has like started to borrow like a 100th of a Bitcoin out of the policy every month. Um, and then like pay his rent and stuff. And then his expectations is that as the price of Bitcoin goes up, he'll be borrowing like less and less um amount. But anyway, we haven't like designed the product for that.
I
But
see, I see. Yeah.
yeah.
Yeah, that's interesting, use case behind it. I guess, like, my other, like again, I always think about risk factors, right? It's like, okay, if we're looking at this for a client, right? Like, okay, so with a traditional insurance policy, right, I assume there's some level of protection, right, if the company
And
defaults financially.
yeah, so I should say we're regulated in Bermuda, and Bermuda is a legit place to have a life insurance company. It's like where you walk around and it's like Munich Re and Chubb and it's where Athene is based. So it's like we have a chief risk officer and a chief compliance officer and an independent board and enterprise risk management framework and all that stuff. Um, so you have that level of certainty that we're not like YOLOing it on chain or something. Um, and like our financials are audited. These are all things that are normal for an insurance company,
Yeah, of
but
course.
sometimes in Bitcoin, there's not the greatest history of like having an audit. So
Right.
I mentioned these things just so they're there. Um, yeah,
But there's certain protections in place, like, for example, if, like, let's say this was a long-term thing, right? And, like, 20 years from now, something happens to the company, right? Is there still that payout there? Like, is it separated from, like,
well,
what?
yeah. I mean, we
Yeah,
we have to post a ton of like every insurance company. Like we have a bunch of our own capital inside the company. That capital happens to be Bitcoin,
right.
but that's like first loss capital. But policyholders have the most senior claims. Bermuda, Bermuda really doesn't like insolvent life insurance companies. They have been very, very, very infrequent. And the way that gets managed is if we screwed something up, they would take it over and pay out our policyholders.
I see. Okay. So there is guarantees in place, even though, because I guess from my perspective, it doesn't matter that Bitcoin's not like a regulated security, obviously, unless it's in like the ETF form, right? So that doesn't have anything to do
Correct.
with it. Okay.
Correct. No, that's fine. I guess there, and what I'll say is there's sort of two possibilities in the world. Um, One possibility, which I maybe shouldn't highlight, is that like Bitcoin completely collapses and goes to zero, which I
That's fair.
find
It's
like
a yeah.
like very unlikely. But in
Right.
that scenario, we have a bunch of dollars and we would just buy a bunch of Bitcoin and then we would like trivially be backing our liabilities. In the other scenario where Bitcoin is worth a lot more than it is today, then we're a very successful life insurance company and like everything is sort of right ways. So they're really in our, I mean, look, I'm the CEO of an insurance company. Like I spend hundreds of hours a year on like meetings about risk and compliance. So I don't want to say that there's no risk because I do a lot of risk management,
Of
but
course.
I also want to say that it's sort of like right ways risk. It's we're incredibly conservative, and there is no way we could lose policyholders' um, money without losing ourselves a truly extraordinary amount of money first.
No, that's good to hear because it's yeah. I just you always want to think about obviously incentives, um, but yeah, I guess I'm just trying to understand still like for the permanent policy, right? Um, what are the main use cases there? Like for somebody, like you mentioned, like, okay, so somebody that has long-term conviction in Bitcoin has some kind of insurance need or wants to benefit from the potential ability to borrow or have that tax-free payout. Like what kind of people are you seeing utilize this product?
Yeah, look, we basically have two different personas of policyholders. And one of them is probably listening to your podcast, and the other isn't. So, one is what I'll call like more crypto native folks, people who are like wealthy or have savings because of crypto. What's interesting about those folks is they're growing up. So a lot of them are basically like men who bought Bitcoin or whatever in like 2013, 14, 15. They were in their 20s. They're now like in their 30s. They're getting married. They have a serious girlfriend. They're having kids. And like as they have matured and the types of planning that they're concerning themselves with have matured and the space has matured, like having this mature, like native option for them really resonates. The other set of people are the people I sort of mentioned. They like have savings, maybe they have some wealth, they've built up some um a nice nest egg. And they've decided, again, for inflation risk reasons or currency risk or whatever, to own 1 Bitcoin, 2 Bitcoin, 10 Bitcoin, 20 Bitcoin. They often have a financial planner like you, TJ, or an estate lawyer, and they often are much more sophisticated in that they like have irrevocable trusts and revocable trusts and like a will and then they've probably already thought about term life or whole life or private placement life insurance or like these are deferred annuities. Like these are tools in the toolkit that are like pretty common. And we our story for those folks is like, okay, you've made this decision to own this 5 Bitcoin. In fact, it is not like part of your liquid portfolio. You're already thinking about it as a thing you want to hold for the really long term. So like here is an appropriate like protection and tax wrapper. If you think you do want liquidity, there's the loan perspective. And if you think like, no, this is just like a savings I've put down for my kids, like in case Bitcoin is worth a gazillion dollars, then, the whole life aspect matters more. But yeah, those are the two like
Gotcha.
personas we have.
No, that's helpful to know. And so I'm still confused. So like you're saying if they had existing Bitcoin, they couldn't just obviously like use that Bitcoin, start the policy, right? It would be buying in over time kind of thing.
No, I'd say the opposite. I guess what you said first, like most people, look, I don't really recommend that you go short Bitcoin, right? So if you buy the contract from us, to go back to my earlier example, where you are going to pay us 1 Bitcoin a year for 10 years. Um, if you don't have that Bitcoin today, like, yeah, we do have some users who are like, oh, I'm going to use this as an excuse to dollar cost average into
Right.
Bitcoin. But you are short Bitcoin, right? You owe us 10 Bitcoin. So if you
Hmm.
don't have it. So what we see most people do is they've already have the Bitcoin or they already have the intention to buy the Bitcoin. And obviously in the first category of people, the like crypto native people, sometimes they've got 100 Bitcoin or 1,000 Bitcoin. They're buying a big chunky policy from us. But in the second persona, I think again we're not really trying to convince people who haven't already made a decision to buy Bitcoin or the ETF.
So they can actually
Yeah,
use existing Bitcoin to fund that policy.
correct.
Now, obviously, like I'm not asking you for the tax professional, but my head goes to okay. So if I gift you a Bitcoin and it has a bunch of unrealized gains, does that mean that that's a taxable event for me?
The honest answer, beyond I'm not your tax advisor, is that it is ambiguous and sort of unknown.
Mm,
We do not decide what you do with your taxes. And then we have had different people tell us that they have received different advice from their accountants and their lawyers and stuff.
okay.
Um, I think the most conservative perspective is that it is a taxable event to pay your premiums. You can't barter your way out of capital gains tax, and it's still worthwhile doing if you think that there are more gains between now and forever
Right.
than there are between when you bought and now. Um, but we definitely have users who have taken a different and the users and their advisors who have taken the opposite position. But that's not for me to say.
I understand. I appreciate you broaching the question. Um, I guess just a couple of things that come to mind that don't necessarily have to do with insurance, but obviously, given your conviction in Bitcoin, like and talking about having people fund their policy with actual Bitcoin. Like, what is your take on kind of people using ETF to own the Bitcoin versus actually owning it directly? Um, I guess just if you are someone that has long term conviction in the asset.
Look, I'm running a life insurance company in Bitcoin, so I'm not one of these people who's like a maximalist and thinks everyone needs to like have their Bitcoin on a hardware wallet buried in their backyard or whatever, or run their own node. So I think what I'll say is that we find that, um, the user who is more like a husband and wife team who's decided to own 5 Bitcoin, they often do buy a policy that's their whole stack. Sorry, that is all their Bitcoin. Um, I think what we see in the really big folks is they're actually have comfort that we have a limit. Like we can't take 1,000 Bitcoin from you, even if you wanted to send it to us. And we have had people ask, and that's because we're not willing to take on more risk on a individual life than is like prudent given the size of our balance sheet. Going back to we really like to make sure that we can like pay every claim and be trustworthy. So what I usually recommend for that group of people is that, you want to have a diversification of the ways you're holding Bitcoin. So you might have some in the ETF, you might have some in a hardware wallet, which is self-custody. You might have some at a like Casa or an Unchained, which is like a multi-signature, like estate often like used to like make, do key management like
Right.
onto your kids. And then you might have a life insurance policy. And then like, this is a menu and a diversified set of ways to hold Bitcoin. Um, yeah, I'm just not one of these people who I think what's unique about Bitcoin is the ability to self-custody, but not an obligation to do so.
Right. No, that's helpful. Thank you. Um, so yeah, so back to the actual, so let's say you put a Bitcoin in, right? How is that payout determined for you know, the death benefit, I should say, right? And obviously they get it any
Yeah, yeah.
time, right?
Yeah, we're a normal insurance company, right? Like we underwrite you. Do you smoke? Do you not smoke? Are you a man or a woman? Do you, if you skydive, we're not going to insure you. And then like a number gets spit out and that's your offer.
I see. Okay, got you. And then obviously, so the typical structure, the payments are like for a set, you mentioned 10 years, but it's like, is it usually a set amount of years or is it just for the life of like for your life basically?
No, no, no. It's a tempeh, and that's to comply with all these like IRS rules about what is and isn't life insurance and what does and doesn't get the tax free
I see.
policy
I
loans.
see.
Um, so no, it is a tempeh.
Okay, got you. And so basically someone, so, the trade-off, right, with the insurance component is that, obviously the longer they live, right, the more that favors the insurance company, correct?
I put it slightly differently, which
Sure.
is um, if you live longer than your expected mortality,
Right.
then we have made money on you.
I
But
see.
if you die sooner than your expected mortality, then we have lost money on you. And then the way an insurance company works is when you take, 100 or 1,000 people and you put them together, then you begin to have statistical regularity.
Right.
And that statistical regularity means that, yes, I, as the insurance company, might make money or lose money on every individual case, but it sort of, by the law of
As a
large
whole.
numbers, sort of works out so that we can like estimate that how much money we're going to make. So yes, if you were clairvoyant and were somehow certain that you were going to like outlive the the current expected probability distribution of your life, then it may appear like a bad deal. Having said that, again, if the value of Bitcoin has gone up considerably over time, then that is like all swamped by the tax benefits, right? So the particulars of whether you've paid more or less for your mortality coverage than you should have,
Right.
um, in general, if I took the first population of people, right, like crypto native folks, they tend to be, 35 to 45-year-old men obsessed with longevity. So like they're all like following Brian Johnson and stuff. So they all believe they're going to live longer than they're supposed
Right.
to. But again, if you believe that and you believe that Bitcoin will be worth $1 million a coin in 50 years, then it really doesn't matter.
You're saying because the underlying performance of the asset get plus the tax benefits still
Correct.
makes up for the
Far exceeds actually
yeah. Yeah,
the
because if it was a traditional whole life policy, right, what they're using, what, treasury bills? I don't even like, what are they using
yeah,
to
something like
deter,
treasury bills. Yeah, yeah.
right? So basically, obviously that annualized return is much less, so the math is gonna be even uglier if you were to exceed your expected, like, mortality date.
Correct. Correct.
Interesting. Cool. Very cool. Well, is there anything else that we should know about what you're building?
Um, it's a very straightforward and simple process. There's no blood work. We like get digital records on your health and prescription drug history and stuff. and you go to meanwhile.bm. And I think the big thing I'll mention is that we get on the phone with every single person who signs up. It begins the flow on the website. So this, 30 minutes doesn't have to answer all of your questions. Me or one of my colleagues reach out to folks. There may be particulars about you have this type of trust or that type of trust, and or you have one kid and you plan to have four. Like all these things are things we're happy to talk through with people. Give folks more information about how we get yield or our enterprise risk management framework or wherever you want to talk about. So going to our website, meanwhile.bm, and signing up is not some obligation to pay. It is an obligation, or it is an opportunity to learn more.
Awesome. Appreciate that. I'll definitely link in the show notes to the website and all your socials so that if people want to connect with you. And Zach, thank you for coming on and sharing your knowledge.
Great. Thanks so much. I know it can be a weird topic, but we really believe that marrying these two things together can be really powerful for people. Thank you again.
Absolutely. Thanks, Zach.
This podcast is for informational and entertainment purposes only and should not be relied upon as a basis for investment decisions. None of the information provided in this podcast is intended as investment, tax, accounting, or legal advice.